Hi everyone, this is Hector. Welcome to a new video of the course. In this video I want to explain how I read price action around the 50 simple moving average in order to in order to see early warnings of early signals of warning as of how the trend might be running out of steam. Okay, right now I'm showing you a chart of the GBP against the Swiss franc of the 4 hours time frame. We can clearly see that we are in an uptrend, okay, making higher highs and higher lows, as I am marking right now on my screen. Again, very clear uptrend, but I was saying in the first video that not only we've got to determine whether we are in a trending market or not, also we've got to determine whether we are in a healthy trend or not. It's very easy to see whether a chart is trending or not, but it's not so easy to determine the health of that trend. Okay, like I say, in this case, clearly we are making we are clearly in an uptrend. Okay, we are in a channel. I can clearly we can clearly see that we are moving within an upward channel, okay, making, like I say, higher highs and higher lows, swinging up and down within the channel. But like I say, it's not a healthy uptrend, and therefore it's not an uptrend or I personally, according to my system, it's not an uptrend that I want to get involved with. And I'm going to show you how to read price action around the 50%. The 50 simple moving average, in order to realize in advance that perhaps we might want to let this trend pass by without taking any trade. As usual, my 50 simple moving average is marked in red. Okay, as you can see, most of the time we see the 30 moving average above the 50, the 30 above the 50, and the 50 above the 100. We have a small crossover there, but let's for the sake of this video, let's not pay any attention to that. Okay, I just want you guys to focus on price around the 50 simple moving average. As you guys know, in a perfect trending scenario, I like the 30 moving average above the 50 and the 50 above the 100, and price swinging off the area between the 30 and the 50. Okay, what I usually call the dynamic area of support and resistance. Since this is an uptrend, that means the area between the 30 and the 50 is the area of dynamic support. In a downtrend, this being the 30, this being the 50, and this being the 100 simple moving average, I like price, all the retracements to be held by the dynamic area of resistance, meaning the area between the 30 and the 50 simple moving average. All right. As you guys know, as I explained on my first video, I like seeing price spending most of its time above or below, depending on, once again, whether we're in an uptrend or a downtrend. But at any rate, I like the price to be contained in the right side of the 50 simple moving average. In this case, since we're in an uptrend, I like price to spend most of its time above the 50 simple moving average. In this case, we can see that this is the case. Okay, we have few pierces. Okay, very brief pierces above the 50. That's all right. We get 1-2 closes below the 50, but immediately after we shoot again up to the upside. This is also all right. Just one quick breach below, no worries. 1-2 closes below, but immediately after, once again, it shoots above. But at this time, okay, the trend begins to show some weakness. Okay, we begin to see how the bulls are not totally in control of this trend. Every time price retraces, the bears actually show their teeth, okay, they show the claws, and well, they've breached quite heavily into the 50, okay. This is a serious dent into the 50, all right. It's gone almost all the way down to the 100. It's not like here, it's not like here, it's certainly not like here and here, where the bulls, they had a quick attempt onto the 50, but they just couldn't really breach it, okay, for very brief moments there and there, but immediately after, the bulls regained control and muscled price once again to the upside. However, this case, this is a different case, all right. That's quite a dent into the, quite a bite into the 50 simple moving average. It's an early warning, all right, that this trend might be running out of control. Nonetheless, we have a new swing up, okay. We take out the previous swing high, we make a new high into the uptrend. So from a technical point of view, we are still in an uptrend. However, we see that on the next retracement, we actually once again, all right, have quite a bite into the 50, all right, almost once again almost to the 100. We almost touched the 100. At this time, it's been two following swings in a row where the dent, the bite into the 50 has been quite strong, okay. It's been like, I always say that the 50 is like a cat, okay. You can cuddle a cat, but you don't want to mess too much with a cat, because finally, if you tease a cat for too long, the cat will scratch you back. Well, it's just a silly analogy, I know, but it's actually a valid analogy, because when you tease the 50 simple moving average for too long, eventually it will bite back at you, okay. Basically, the 50 simple moving average is like the 61% Fibonacci retracement, the 61.8% Fibonacci retracement. If you draw your Fibonacci's for this swing, okay, we can clearly see that the retracement, this is the 61.8% Fibonacci. The retracement actually probably goes all the way down to the 76% Fibonacci. I am not too keen on the 76 Fibonacci myself. In my opinion, the retracement is too deep into the trend. Yes, sure, you have a whole new swing to the upside, but the retracement goes almost all the way back to the starting point. Okay, this is the starting point, the place from where the swing sprang off, and the retracement goes all the way back down to where it all began. All right, I don't like that. Okay, I like the retracements to be held by the area between the 38 and the 61%. Anything beyond the 61% means that the bears in this case are just showing too much strength. The bulls are still in control. We are definitely making new highs at every consecutive swing, but the bears are definitely not beaten. Okay, are not beat. The bears still are showing quite a strength, and sooner or later they will regain control of this market, okay. And the actual control, the actual turning point comes at this final swing, okay. Not only the bulls cannot outtake the previous high, but moreover, once again, okay, the bears drive price all the way through the 50, and this time around they do knock the 100. Okay, they do slap the 100 simple moving average. They couldn't make it here, they couldn't make it there, but finally we did. The bears are once again back in the game. All right, and actually, on this, let me take off this Fibonacci retracement. Finally, they make a new low. All right, you see this lower low and a lower high. That signifies that the trend is, perhaps it may not be over, but indeed it's weakening. Okay, it's run out of steam, at least for the time being, and we could see that in advance from the previous swings. All right. The 50%, the 50 simple moving average has been breached for just too long. Okay, this is alright. This is alright. This is certainly alright. But like I say, this is not alright. This is not alright. And finally, well, you know, as soon as you see that the swings begin to dip, begin to dip their toes too deep into the 50 simple moving average, you know, let the early signals of warning, like the alarm bells warn you in advance that something is just not quite right. Okay, the bulls that pushed price all the way up here gave up too much, gave up too much territory back to the bears. Once again, the bulls scored the goal, but the bears were not dead. Okay, the bears drove price down almost to the beginning of the swing. Okay, just as in here, almost to the beginning of the swing. That's not nice. All right, you don't want traces to go all the way far down to reach the 50 for that long. Okay. At the beginning of the swing, we definitely saw a very nice swing up. Okay, then a retracement, but the bulls, okay, managed to drive price so far up high, that when the retrace took place and the actual retrace ended, the bears couldn't quite gain back all the land that gave up to the bulls. Okay, in fact, if I draw my Fibonacci's from the swing low to the swing high, I can see how the 61% Fibonacci retracement, which in my opinion is something like a last line of defense, all right, was not taken. Okay, was not breached. The bulls' last line of defense is still intact. All right, that's all right. Just as you can see here, the 50% Fibonacci, sure, we had a quick pierce below, but immediately after we shot to the upside once again. That's all right, but this is not all right anymore. Like I say, if we draw our Fibonacci's back to that area, all right, back to this area, first of all, we definitely breach below the 61, and we almost get back to entry levels, meaning the 100% Fibonacci retracement, meaning the beginning of the whole swing, and almost to the 100 simple moving average. All right, here we have early warnings. All right, early warnings that this trend just don't have steam enough. Okay, we might be running out of petrol here, and despite the fact that, at least from a technical point of view, we're still in an uptrend, still making higher lows and higher highs. All right. Sure, we are in a technical in an uptrend from a technical point of view, but that's not the question. The question is, how healthy is this uptrend? Is this a trend that it's strong enough for me to risk my money at it? In my opinion, all the way here, and here, sure, it's a high probability chance that the uptrend is gonna still be strong. But at this time, like I say, I'm not even gonna pay attention to the crossover there. Okay, but at this time, price biting too hard into the 50, almost to the 100. For me, it would have been time at this time to not search for a long entry anymore. Okay, once I see these two bites too hard into the 50, it was certainly a warning enough for me to cancel the whole thing and stop looking for long opportunities here. In fact, if I keep scrolling to the right side, well, you can clearly see that we are no longer in an uptrend. We are now ranging sideways. the 50 simple moving average had warned me in advance. The 50 simple moving average is my friend. Okay, it tells me when to stop messing around. All right, and when to stop considering any possible entry, because the trend is losing strength. All right, and this was very clear. All right. Here I had my final my early signals of indications of trend weakness. I had the confirmation once we made a lower low and lower high, when of course finally we got the crossover. The 100 simple moving average was breached. The whole thing was a mess. Okay, this was not an uptrend anymore. In fact, you can clearly see that we are now rather bouncing up and down within a sideways channel. We're not trending anymore, guys. We're now moving sideways, and that was like I say, that was signified in advance with the 50 simple moving average, okay, being breached by way too long, okay, not like here, or here. I tell you what, guys, perhaps it would be a good time for you to pull out your own charts, search for trending scenarios, search for trending scenarios where the moving averages plot on your chart the way I like them to be plotted, all of them parallel to each other, all of them pointing in the same direction, no crossover whatsoever, all of them in order, etc., etc. And you will see by yourself that when the 50 simple moving average is breached by a long way, all right, like here, almost getting nearer and nearer to the 100 simple moving average, you will see that there are chances that you will begin to move sideways rather than trending anymore. Okay. Like I say, it's important to follow price action around the 50. The 50 simple moving average, like I say, it's similar to the 61.8 Fibonacci retracement. You don't want your retraces to breach for too much the 61 Fibonacci retracement. It means that the retracement is getting too strong. The bears, in this case, since we are in uptrend, the bears are regaining strength. Okay, they are not totally dead at all. Okay, the bulls may be running out of steam. They might be exhausting. And the trend as a whole might be, like I say, running out of petrol. Okay, and this is the case. As you can see now, I can clearly draw a downtrend. We're basically moving sideways. The moving averages are flattening. All right, and all that. All right, we are making lower lows, lower highs, etc., etc., and that, once again, I repeat, it's important, was signified in advance by the 50 simple moving average, all right, or rather by price biting too hard, quite a deep dent into the 50. You don't want that, all right. The 50 simple moving average is not to be messed around with. Okay, always remember the cat. Okay, you can cuddle it. Okay. Cuddle the cat. I keep on saying the cat analogy on my videos. I know you guys probably think it's a silly analogy, but it's quite useful. Okay, just keep it in mind. The 50 simple moving average. It's our friend. It lets us know in advance when things might be turning against us. Okay, and these were the signals that something was beginning to smell, not that nicely anymore. And you can clearly see that finally, we've begun to move sideways. Okay, the uptrend is no longer. Now we're ranging, and like I say, we saw that in advance here and here, nearing the 100. All right, guys, that's all for this video. Like I say, just try to pay attention to the dynamic area, meaning the area between the 30 and the 50. If the area between the 30 and the 50 is holding the retracements, fine, you are good. As soon as you begin price breaching below the 50 simple moving average, getting too many closes, bar closes below, you know that something is not quite right. Okay, as soon as you see price diving all the way down, or almost all the way down to the 100, you see that something is not quite right. Okay, guys, keep an eye on that. It's important. It might save you from entering trades. Okay, you might think that this is still an uptrend, and in fact, well, it was the end of the uptrend. All right. Okay, guys, that's all. Keep an eye on the 50% and the 50 simple moving average. It will keep you away from many losing trades. All right, guys, that's all. Bye bye.